Okay, so we're gonna have a look at this SBM on ASX. We're in the 3 months chart once again, just to have a look at the history here. So it's pretty interesting, this level that we are at right now, 261. You can see going back all the way to 91. There was action here. Then we're going across to 2006. There was a lot of action here again at this level. Then going back from 08 until 2012, there was a lot of action at this level, trying to break it but unable. And once again over here in 16 and 17, there was a lot of action here. We broke it, and then we consolidated, and then we broke it again. So now we're coming back to test it again, and once again there's action around it. So there's a lot of things here. If we start bouncing, maybe we will bounce for a long time. But at the same time, what we can see here is that, well, this is a one candle is 3 months, so it's a lot of action in that candle. So for example, once we're coming back down to this level, maybe we already did bounce. So we already bounced from the bottom here to the top, 63%. So that was huge bounce already. And that played out. Was that the bounce already? If you have a look at the RSI, there's a lower high here once again, showing that the momentum is cooling down a little bit. It's gone down, but it did go down a lot, so maybe go down. So what the bulls really want on this chart here, on the 3 months chart, is there's what's the date today? Today is the 27th, Wednesday, right? So we got Thursday and we got Friday. Thursday, Friday until and then the month is ending. So this or is it 1st of January? Oh no, sorry, we got until 1st of January till the next candle, because this is 3 months. So what the bulls want, the bulls want to close this candle before the year end, which is still a long time to go. So a whole month, just a bit more than a month. We need to close it above the 21 EMA. If we close it above 21 EMA, then it's gonna look really good on this chart, because we have one test of the 21 EMA and we got pushed up and closed above it, and then we're gonna have the second one. So it's gonna be like a fork here with the bears getting rejected basically. So so that's what we got there. Now let's go have a look at the monthly. On the monthly chart, so the key thing, one of the keys thing here is this 21 EMA, the purple line once again. You can see that once we broke it bullish, we kept bouncing off it. Even the 13 EMA, which is the blue one, we kept bouncing off it until we reached the top, retested the 21 EMA, bounced again, and then we broke it. Then we broke it down. And why did we do that? If you have a look at the RSI, once again, the momentum, we're getting a bearish divergence here. So we got a lower high on the RSI. Got a lower high on the RSI, but we got a higher high on price. So it's showing you that the momentum has been losing, and hence we played out and we dropped down. So and now we're trending down, and you could even draw a trend line. Not really. So and now we're at this key level. There's a lot of points of significance here on the monthly chart here. So let's see. Now let's have a look at the weekly. So weekly looks a little bit better. So what we have here is the opposite. We're having the RSI coming down to oversold levels at 30 here, and then it had this huge bounce, which was 60%. So and now we've come down again at the same level, but we're getting a higher RSI. We even dropped below this level here, just by a tiny bit of a wick, but the RSI is high. So we're getting a bullish divergence here. So it's the opposite of the bearish divergence. We're getting a bullish divergence here, and we've got a bit of a trend line going. So we had a little bounce. Now we came back down. So it would have been a good place to buy here, and now now it's how much has it bounced? It bounced about 7%, 7 to 8%, so it's not that much yet. So that's the weekly. The key on the weekly is that the bears didn't get any follow through, and that's why it looks a little bit bullish to me. This candle here, this green candle here is bullish because it's got the wick, which means the bears tried to push the price down, but the bulls rejected them, and then they pushed the price back up. And now we're at the top here, so it looks good so far. If the bulls can keep up, and what we need to have a look is this 13 EMA. So we got rejected twice. We're gonna get rejected the third time, and then give us an opportunity to buy later. And at the same time, what it might do, if it rejects it at 13 EMA, it might come back and retest this trend line. So that would be a good buy here as well, because if it does break through, it's easy to just sell it, and the risk is basically provides you a good point to buy, because you will know if you're wrong. If you're wrong somewhere here, if you go below here you sell, or if you go below there you sell as well. So you get two signals, sort of thing. But that's weekly, so it's one candle is 1 week. Let's have a look at the daily. On the daily, what we have. So what we have on the daily is this huge dump coming down. Let's get rid of this. So we have a huge dump, and here also we're having a low, and you can see that the RSI here double bottomed. That's why we had this huge bull volume here. So we had a huge bounce, and then the bulls couldn't push higher. We came down, and then we came down and broke the low, but no follow through. So the bears got rejected, and the bulls came in with a bit of a volume. And today looks really good. The two candles look really good. We got the green Maribozu. It closed at the high pretty much of today. And also, once again, you got the bullish divergence here, because you got the high low. Like, this is sort of, I will treat this like as a double bottom. But the key thing here is that the last one here, you got a lower low on the price, but you got a higher low compared to here. You got a higher low on the RSI. So you got the bullish divergence. So that shows that the bears are getting tired, and the momentum to the downside is getting getting less. And this can also be confirmed because they broke down and they couldn't go down. They broke the support. They couldn't go down, and the bulls completely rejected them. So this could be a good little buy opportunity. Let's turn off the extended hours. So this could be a good buy opportunity here. But at the same time, if you buy right now, it's probably not the best idea, because well, first of all, we already went up 7.5%. So if we do come down again, you will lose 7%. And where do you sell really? Like, if the risk would be you put a stop below here, so if it goes below you sell again, but so, and also at the same time, what's happening is you had the trend going. So you got the high, lower low, lower high, higher low, lower high, and then you broke down to get the lower low, and now you set a higher. You broke this resistance here, 260. You broke it, but the market is about to close, so you're not gonna get a lot of. So this is almost like a double top. So what you need to do is need to see if there is any follow through. At the same time, there is this 21 EMA resistance once again acting the price. So if I was gonna do like a little trade of this, I would probably try to see if there is a pullback. If there's a pullback somewhere in the 250s area, and then you can try to enter, and that and then if it keeps dropping, you got a little bit of less risk, and then you just get out once this level is broken here, which is going to be the stop level of 243. Stop loss level 243. So and also this 21 EMA, if you have a look on this way down, it did act as a resistance, but at the same time there was 2 times where the price action went above the 21 EMA, and it was just a fake out. So they faked out and then they went down. Here we bounced above the 21 EMA, we stayed there. So there is no reason why it can't do the same again. It can bounce here and then go down again. So so it's not the reason. The best reason would be to enter is on the, if we bounce, top out, come back down, and then you enter over here. You enter on this low here. You enter on this low here, and you expect to go high, and then your stop level will be over here, about 4%. So you can put down, say you put, I don't know, $5,000. You put $5,000 times 0.04. 4%, so you will lose $200 or maybe more because of the slippage fees. So let's say you're losing $250 on the 5,000, but then maybe you will gain more. Where's the next resistance? So what we need to do is, we broke this resistance here, then we got another resistance here. If we break this resistance, we haven't got any resistance until 280. So once you get up there, you're basically making 9%. So this is a good this could be a good setup, a good risk reward setup. And then obviously once you enter, you're watching for your signals, other signals, if there's like a news releases or anything like that, to either stay in the trade or not. What else is here? The volume is not showing anything, except like we had this big dump here, and then we had another big dump on the big volume, and there's no follow through. So this is good. This is more bullish than bearish, and especially because this level is historically so significant, going back all the way to 1992. So if we start bouncing from here, we can start bouncing. There could be a huge bounce. Could be a huge bounce. Maybe we could draw a little. Maybe we could draw a little trend line here. Maybe we will bounce all the way to the set a lower high on the 16%. We could bounce 16% and stay in this triangle, which is okay, which is good. And at the same time, what we will do is, we did sort of have a lower low here. So, but anyway, so we need to change. The step one is to get this thing happening. So if this happens and we break this high here, that means we have changed the daily trend to bullish. So that's step one. After that, we can look at everything else. So I think that's it. It looks like it wants to bottom out here, possibly the 3 months. If we close high as well, it's gonna have lots of wicks rejecting as well from this area. This is the monthly, so we're gonna have lots of wicks as well. And 3 months, the key thing here is above 21 EMA. And this volume is rising here, so that's interesting. I mean, the other interesting thing is that we got I won't go into that too much, but we got a lower low. We want to set a lower low on the RSI, and we want to set a higher low on the price action. So this is a different type of divergence. I think they call it the hidden bullish divergence. So that's also a bullish sign if we set a higher low compared to this point here on the 3 monthly chart, which is 172 for continuation. So yeah, I said that's the setup that I would be watching for. You know, we can always go higher here. Look, like we gapped up here, and we looking very strong. The candles look strong, so we can go much higher here, and then drop down. But we're unlikely to go past 280. Unlikely to go past 280 on the first. So any pullback is probably the better to reload. We could go like this. You know, we could do a double top, and then that's when you buy. You try to buy at these bottom levels here, and that way you got your stop level. Once you start breaking above it, this is your new stop level, and then you basically almost a risk-free trade there. Anyway, not financial advice as always. All right.